Tariffs could exacerbate deflationary trends and unemployment, challenging the Communist Party's promise of improving living standards. 3. Currency devaluation risks. To offset tariffs, China has allowed its currency to slide, making exports cheaper. However, rapid devaluation could trigger capital flight and financial instability, undermining investor confidence. 4. Retaliatory limits. While China has raised tariffs on U.S. goods to 125%, its smaller import volume from the U.S., $145 billion versus $440 billion in exports to the U.S. in 2024, limits the impact of retaliatory tariffs. This imbalance reduces Beijing's leverage in a tit-for-tat escalation. U.S. strengths and vulnerabilities. Strengths. The U.S. holds long-term economic power due to its consumer market, technological edge, and ability to form trade coalitions with allies. Trump's strategy of incentivizing manufacturing shifts to countries like India or Vietnam could reduce reliance on China over time. The U.S. also benefits from a stronger bilateral trade position as China needs the U.S. market more than vice versa. Vulnerabilities. The U.S. depends on Chinese goods that are hard to replace quickly, such as semiconductors and pharmaceuticals. High tariffs could lead to stagflation, rising prices, and economic slowdown, hurting American consumers and businesses. Political polarization and public tolerance for economic pain are also limiting factors. Can China win? Short-term resilience. China is better positioned to endure immediate tariff shocks due to its export controls, domestic market, and political cohesion. It can inflict significant pain on the U.S. by restricting critical goods and rallying domestic support. Long-term challenges. However, a prolonged trade war could strain China's export-driven model, especially if the U.S. successfully diversifies supply chains or builds coalitions to block transshipping, rerouting goods through third countries. China's economic slowdown and reliance on U.S. markets limit its ability to outlast the U.S. indefinitely. No clear winner. Most analyses suggest trade wars lack winners. Both sides face higher prices, disrupted supply chains, and slower growth. Global trade increased by 3% during the 2018-2019 trade war due to bystander countries filling gaps, but a full-scale war in 2025 could trigger a global recession, harming both economies.